Okay, everybody, this is Bo Eckstein, president of Emerge Lending Group. Today, we're going to talk about fix and flip loans, how to get them, how to qualify, how you're priced, and all that good stuff. So let's get started. Okay, essentially, in today's market, we have lots of money, lots of institutional capital. There's a lot of available products, but I want to talk about how to qualify for these loans. So what are the basics here? We can lend 80% of the purchase to 100% of the repair cost, up to 90% of purchase and 100% of repair cost, depending on your credit score and your track record, location of the property, loan amount. So when we're looking at these loans, we're going to simply ask you, what's your purchase price? What's your repair cost? What's your ARV? How many deals have you done in the last 2 years? And what's your credit score? From there, we can give you a price because obviously the more experience and the higher credit score you have, the better deal you're going to get. If you're new and you got a lower credit score, you're going to pay a little bit higher cost to get a little lower loan to value. So how do we qualify you? Track record, credit score, loan amount, LTV, loan to value. What we need from you: copy of your driver's license, purchase contract, proof of insurance, loan application completed, your entity documents that you're buying the property in, whether it's an LLC or corporation, or if you're buying as an individual. Now, some of my funds will not make a loan to an individual. They want to make a loan to a business entity because these are business purpose loans. And they want you to sign as a guarantor on all of our products. You will sign personally as a guarantor of these loans. Now, we do have options if you do not have an entity set up to make a loan, a business purpose loan to you as an individual. But I need to know that up front because some of my funds don't allow for loans to individuals. These loans are strictly business purpose loans. So let's go over it again. Pricing is determined on your experience, how many deals have you done in the last 2 years, your credit score, and the loan amount and loan to value. So that's how we come up with the pricing. So that the easiest way to get a quote from me is to let me know in an email or a phone call. Hey, Bo, I've got this property in contract. I'm buying it for $100,000. It needs $20,000 in work, and then it's going to be worth $170,000. I've done 6 deals in the last 2 years, and I have a credit score of 720. Based on that, I look at our matrices, and I can tell you where your pricing is going to be. So I just need to gather about 5 minutes of information from you up front, and I can best put you into a loan that would be the most beneficial for you for that situation. Because we have all sorts of loans. And some of my clients, they say, listen, I don't want my construction money to be fund controlled. So when we're lending 100% of the rehab, you don't get that money up front. We actually hold it back and we disperse it as you progress. So you're always going to need a little bit of a cushion because you're not usually going to get your first draw until that first line item budget, those items are complete. So you're going to have anywhere from 2 to 4 draws typically on these smaller fix and flip projects. So that first draw, you have to progress and get a percentage of whatever that draw request is. Let's say it's demo, electrical, and plumbing. So once you're done with those, you send in a draw request. We send out a third-party inspector. They come in, they take pictures, they send us back a report. This usually takes about 4 or 5 days. If all the work's complete, let's say you had $15,000 allocated for that, we wire it to your account $15,000 for that work. So as a flipper, you're always going to need to have a little bit extra capital, even though we might be lending up to 90% of the purchase and 100% of the repair costs. So you're always going to have a little bit of seed money to get the project rolling. So I always try to convey that to my borrowers because it's important, because The worst thing that can happen is that you get a project stalled out and it's not progressing. We can't release funds because the work's not done, and then you have a big problem. Let's talk about the. So there's 3 tiers. There's a tier 1, which is a super experienced borrower that's done 10, 12 deals in the past 2 years. There's a tier 2 borrower who's done 5 deals in the last 2 years, and then a tier 3 is somebody with little to no experience, or maybe he's done 1, 2, or 3 deals. That's how we're going to figure out the pricing for the deal. And also, many investors are flipping properties in different locations. So depending on the state, depending on the loan size, that's how pricing is determined for all of our loan products. And we can also just fund just the purchase money. So if you just say, hey, I want to borrow 85% of the purchase price, I'm going to take care of the down payment and the rehab myself. That's also a common thing that we can do, and pricing is dependent on experience, credit score, and that thing, so forth. So that's basically our fix and flip loan product. It's a pretty simple underwrite process. We do need an interior appraisal done. Some lenders require an as is and a future value appraisal. So we send the appraiser purchase contract, and we send him your scope of work and line item budget, and say, he gives us, hey, the value of the property today is X, but after the improvements, it's worth X. So we call that a subject to completion appraisal. Some of our lenders only require an interior BPO. So it really depends on the deal, and I can advise you once I get your scenario. So the simplest way, easiest way, is just to simply call me at 925-852-8261 or text me 925-852-8261, or send an email to Beau, B-E-A-U, at emergelending.com. That's Beau at B-E-A-U at emergelending.com. I also fund multifamily bridge loans. We also have a product that we can do multifamily rehab loans. If you're looking for just a bridge loan, we can do anywhere from 1 to 3 year loan terms, typically with no prepayment penalty, although sometimes some of our lenders require a 3-month prepay, and some of our lenders have a 12-month prepay. So I could get around all those situations, but I need to know, exactly what you're doing, obviously, to put you in the right loan product for you. What else can I tell you? We do ground up construction loans, and we'll lend up to 65% of the completed value. So there's a lot of options for you that we can do, and I hope to talk to you soon. Thank you.